Hello, my name is Eddie Tofvik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. The key pattern here has been and still is the purple highlighted mid-March to mid-May shallowy bearish shift pitchfork. The market right now just over the purple middle time. It's currently at 194 3/4. This bearish shift pitchfork continues to be an excellent indicator of the market's overall bearishness, though we also seem to be in between the support from the March 21 low at 191 3/4, which stretches down to the congestion at 187 1/4, and the resistance from the July 2021 low at 197 1/4 up to, I suppose, the declining mauve medium moving average, and that's currently at 199 1/4. I'd also throw in the purple middle time, but I somehow don't think it is working that way anymore. Below the September lows, the market has, as I said 6 weeks ago, and I quote, "We don't seem to have anything that significant as support until the August 2020 low at the 176 1/4 area," end of quote. Whilst above the mauve medium moving average, we might have clear territory until the lows of late June to early July in the 2014 area. That's the price. Not the sorry, my apologies, that's not the price, that is the 2004 area, my apologies, 2004 area. For some reason I put an extra figure in there. So we may have clear territory until the late June, early July in the 2004 area. Minneapolis wheat. The market seems to be held to the sway of two, possibly three features. The first is the bright red May to July head and shoulders top neckline, which is currently at 577 1/4. This neckline has not acted as a cap, but has definitely been pressuring prices lower. Adjacent to this and running shotgun is the green short medium moving average, currently at 579 1/4. Now, part of me can't decide if it is the green short medium moving average or the bright red neckline that is leaning the market lower. That solution will have to wait for another time. Then below we have the dark blue September 2019 to date uptrend, which is currently at 566 1/2. This has been realigned so many times, but it might eventually have found its groove here. I guess we'll have to see. There is no real double top or cat's ears pattern as we have seen elsewhere. But that doesn't mean we will not be immune to the results of such patterns elsewhere over here, so watch out. However, there is a larger pattern which I would draw your attention to once again. I spoke about this 9 weeks ago, and ever since actually, when I said, and I quote, "We're also possibly on the threshold of a really big pattern, a December 2024 to date possible cat's ears pattern. This is a bearish pattern, but the discussion for this will, which I have postponed for a couple of weeks, may be coming up and real soon, as we are about to trigger the downside opportunities for such a pattern. This is a long-term pattern, but I urge you to keep remembering this idea as we travel and stabilize a little lower than where we are. I may feel obliged to deploy it along with all its ramifications," end of quote. Now, I still stand by this, and I have watched the developments around the gapping action in September and now the move once more towards the lows of September with great interest. I mean, we've had decreasing highs and fairly stabilized lows. Could probably even draw a descending triangle there, as we're getting closer and closer to triggering this pattern, but we just can't seem to do it just yet. London UK feed wheat. Okay, so there had been on this daily chart until early July and running for around a year, one major significant pattern here, a pattern that we have not seen in the other grain markets. I still have this on my daily chart for a reason, and the pattern is the bright red late May, early July 2024 bearish shift pitchfork. In early July, due to changeover, we had a very large gapping move higher, up and out of this pattern beyond the bright red upper time, which is currently at 161.10. Please remember this level and also the idea of the bright red upper time, as it will show up again shortly. Now, added to this upper time, we had higher up the important, even today, 50% absolute Fibonacci line at 180.5. And you had there, and even now still have, an area overhead that is a significant resistance, as it capped the market on its rise back in July, with some added nearby help at the time from the purple July 23 to date downtrend, which is currently at 178.60. Since that peak, we've seen prices ease lower, moving eventually below all the moving averages yesterday. Well, more than that, it's probably been moving for a while now, below all the moving averages, and penetrating but not really or consistently pushing below the bright red broken upper time, seemingly happy to slide along the top side of, guess what, the bright red upper time, even now. What is more important is that we are establishing the market below the very, very important dark blue neckline extension, which is currently at 168.35, to a pair of very long-term patterns, which I will detail now. I've also drawn a new bright green late January to mid-July bearish Andrews pitchfork to show the new bearish angle of attack. Now, the upper time is not perfect. It's currently at 162.95, such that 2 weeks ago I said, and I quote, "I am not fully sure about this pitchfork and I may finesse this to a shallower bearish shift pitchfork for the same move at a later date," end of quote. Now, I haven't done this yet, but I'm still thinking about it. This all leads me to my final points, the same points I've been discussing for months now, and some of them was something that I noted back in my annual commentary back in January this year on London feed wheat. To see this, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 2023 to date cat's ears pattern. This is a bearish pattern akin to a double top, formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date, very large head and shoulders top pattern. These two super long-term patterns both rely on one single feature, and that is their common neckline, which is highlighted in purple on my monthly chart. It's currently 168.35, the same as on the daily chart I just spoke about. Thus, primary target X3 for the bearish cat's ears pattern would be down in the 127.5 zone, just below the bright red and big old 2005 to date uptrend, currently at 132.15. A secondary harder to reach target X4 will be down in the 112.85 zone, around where the shallow dark blue lower trend line is, currently at 114.15 for the 2007-2022 ascending expanding wedge pattern. For the head and shoulders top, we would have an even lower primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have on any of my 200 or so charts. The 1975 to date, yes, a half-century old uptrend, and that's currently at 66 even. I'm not even going to give you my secondary harder to achieve target for this pattern as it is below zero. Please bear in mind that these are very long-term pattern targets, stretching possibly over many years, but there are still targets below for these patterns above. Now, that all being said, July with changeover threw a major spanner in the works for such a longer term patterns. The reactionary immediate countering monthly key reversal up for July went back above the purple neckline, but stopped at the 50% absolute Fibonacci line at 180.5 and just under the bright green 2023 to date bear channel line, which is currently at 180.15. The question is posed, and it is a longer term question, is whether this was just a reactionary single month move higher or the beginning of something else. Once again, as in my previous commentaries, I will continue to stick to the reactionary single month move higher, but I am prepared to start looking at the possibility of a new base of support, not only being built but also being exploited for a possible move higher. There is one caveat to this basing higher idea, and is one I've already mentioned. That's the bright green 2023 to date big bear channel, currently 132.90 to 180.15. Even with such a big reactionary move back up, we are still sitting within this big bear channel, and it does have the advantage of already having had at least the minimum 5 touches necessary to legitimize it. For all this discussion, we are still dealing here with some very, very long-term patterns, and you should please bear that in mind. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.